Hello again, everybody, and welcome to this next episode on navigating the world of alternative finance, non-bank finance. My name is Kevin Pierce. I am the president and CEO of Caldez Financial. You can find me on the web at www.caldezfinancial.com. This is the second in our 13-part series on navigating the thorny world of alternative finance. Thanks for joining me. In our last episode, we gave a brief overview of what I call the four main criteria in helping to determine who your next lender is going to be. Those criteria are industry, collateral, performance, and size. And today we're going to take a deeper dive into the concept of industry. As always, we'll start off with an interesting quote. This one from Robert Louis Stevenson. And the quote goes, "Don't judge each day by the harvest you reap, but by the seeds that you plant." That's really important as we're dealing with turnaround situations. You have to plant new seeds every day, and it's a battle. And one of the first steps is finding a new suitable lender who can help guide you through this turbulent period in your business and get you to greener pastures on the other side. So what do we mean by industry? Is this an industrial business? Is it a blue-collar business? Is it hospitality? Is it healthcare? Is it a real estate business? Is it a financial services business, or is it a retail business? All of these different industries will point you in a different direction as far as which lender will be your next lender. All right, so we're talking about industry, so let's take a deeper dive into industrial businesses. These are what I would call blue-collar businesses. So they consist of things like manufacturing, distribution, staffing, construction, building materials, things like that. This is not obviously an exhaustive list, but these are just a few examples of different business and how they have different characteristics that different lenders either like or don't like. So manufacturing businesses, for example, they have assets such as commercial accounts receivable, because most manufacturers are manufacturing a product not to go directly to a consumer, but to go to a distributor or a retailer or another manufacturer. Another thing that manufacturers have is inventory. And it just so happens that in manufacturing, typically the idea is to turn the inventory as quickly as possible. So typically in a manufacturing environment, the amount of accounts receivable that you have is larger than the amount of inventory you have. And that means that there's a specific type of lender that would enjoy that ratio. And those are typically asset-based lenders. Other examples of collateral that manufacturers have are obviously equipment, and in some cases, in a lot of cases actually real estate. And a lot of times manufacturers own their own real estate, or the owners of the manufacturing company own the real estate and lease it out to the manufacturing company. So in the case of a manufacturer, you may have 4 tranches of assets that can all be dealt with either individually or in a package with a non-bank lender, but the composition and the type of equipment and the type of real estate, the location, all these are important criteria in terms of knowing which direction to go to find your next lender for a manufacturing business. All right, so the next kind of industrial business that I'll point out, just because of its different characteristics, are distributors. Distributors are typically buying from manufacturers, and either selling to other businesses or they're selling to consumers. Distributors that are selling to other businesses will have commercial AR, whereas distributors that sell to consumers will not have any commercial AR. Typically those would be credit card transactions, and financing those credit card transactions in the form of merchant card advance is very expensive, and try to avoid that at all costs. But nonetheless, there are a series of lenders that are starting to identify opportunities that are more inventory heavy and less reliant on the accounts receivables. So I've actually come in contact with several lenders who are focusing their efforts on e-commerce businesses, and so these are tending to be inventory only lines of credit. Another example of what I consider to be an industrial business, because it feeds industrial businesses, are staffing companies. Staffing companies typically don't have much equipment, they probably don't have real estate, they don't have inventory, but what they do have is accounts receivable that turn very quickly. So these are, in dire situations, these are good factoring candidates. And in more upbeat situations, sometimes these can be very palatable accounts receivable only ABL deals or asset-based lending deals. All right, moving into another type of industrial business, just one that I chose because it's different than the others, are construction businesses. So how do construction businesses work? Well, there's a number of different layers. You can be a developer, in which case you would have to go to a specialty real estate development, ground up kind of real estate lender. Another type of construction company are construction subcontractors. The difficulty with these for asset-based lenders is that the receivables are usually subject to some kind of future performance. Asset-based lenders do not like to lend against these receivables because there is some future performance, and if for whatever reason the subcontractor went out of business, it would be very difficult to collect on the accounts receivable that the lender is lending against. There are a handful of very specialized factoring companies that will lend against these construction ARs, but it's a very specific kind of underwriting criteria, but it is very expensive financing because it is factoring. All right, so we've talked about industrial businesses. Let's move on to a completely different area, and let's talk about hospitality for a little bit. What fits into hospitality? Well, one thing is hotels. It's been a tough year for hotels because of COVID, and as a result, it's become a very unfavored type of financing. It's very difficult to get a hotel finance right now. Another type of business that fits into the hospitality section are things like bars and restaurants. We're in a very interesting time now with COVID. There have been rules established as to what is a bar and what is a restaurant. Bars and restaurants are unique because a lot of times they don't own their own real estate. Sometimes they do, but a lot of times they don't. So there's not a lot of collateral other than the French fryers or the heavy equipment in the kitchen, which are really tenant improvements in most cases. So there's not a lot there to borrow against. So an industry that has opened up primarily because of the bar and restaurant industry is merchant card advance products. So another hospitality subset is casinos. While banks do lend to casinos, it's a very specialized product. The banks that do it, they do it very well, and they have very dedicated departments that do nothing but lending in the casino business. All right, so let's look at another industry, and this one's kind of important because everybody uses it at one point or another, and that, of course, is healthcare. You've got hospitals, typically that own real estate, that have equipment, and that have a third-party accounts receivable. That's kind of their collateral package for hospitals. You've got physician practices that probably don't own the real estate. They might have some x-ray equipment within the practice, and they also have third-party receivables. In addition to hospitals and physician practices, you have service providers. These would be billing and collection companies. You may have pharmacy distributors. So again, thank you for watching. I'm glad that you joined me on episode 2 of how to navigate through the wild world of alternative finance. My name is Kevin Pierce. I'm the president and CEO of Caldez Financial. Please visit me on the web at www.caldezfinancial.com. And if you have any feedback for me, I'd love to hear from you. You can reach me at kevin.pierce, P-E-A-R-C-E, at caldezfinancial.com. I hope to hear from you, and I hope to see you again in another episode next week.